Chapters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Hi, everyone. This is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show on Tuesday the 2nd of September already. We're hitting September. And this is a very important moment, the last hour of the day. Dow's down 383 at 45,161. You see this arch formation. So I have some patterns that I'm always looking at for subscribers to my opening call, teaching about them. Even more important, we use them in a very diligent and very methodical way. This is a pattern that I always look at to see. Let me just get it right here. This is the rectangle formation right here. I have some webinars in my opening call daily newsletter service that for subscribers you can listen to at any time. So this is the large rectangle. This is the small rectangle. I have a pattern where the price comes down sharply and then goes to higher highs, going peak A, pulls back, makes a peak B, and then a higher peak C, and then a D, which the rule is that it goes just under, right on, or just above the previous high. And then you've got to be careful if it takes out halfway into the rectangle, because it can go down quite a bit lower. The other pattern is the same thing with the rectangle. Comes down sharply, but in one swoop goes almost all the way to the previous high and then arches over. That's the H pattern. That's kind of what we're looking at right now as a potential. We don't know if it's going to be, but it's a potential. And there it is. There's the rectangle. There's the H pattern, because you took out the left side low, and you're actually down below it, and that low was at about 45,156. So I'm watching this very closely. The S&P right now is trading down. It didn't take out the left side low of about the 18th or so, just under 63.50, but it went to a low today of 63.60, and it's trying to come off that low. The 9-period moving average is still very strong, above the 14. That's important, but it has taken out key support, and we're going to watch very closely to see, is there a sharp rally to go to 6508.24 for another leg to the upside, or is this weekly chart saying, and one of the rules I have is the quicker you go from a peak C to a D to an E, the quicker you have some kind of a pullback. Not a major pull, doesn't have to be a major pullback, but a pullback nevertheless. So I'm watching very closely. 63.40 will be key support this week for the S&P on a closing basis. The QQQ, somewhat different pattern, because it's made the H pattern right there after the 583.42 high of the all-time high of the August the 13th, and the low that was made was at 558.84, and today's low is 559.53 by a hair. It held the left side low in this H pattern, but if it closes below that, the next level of support will be down on the 1st of August, the low of 551.68. That's the level we'll be looking at. Let's go to the IWM. The IWM is the Russell 2000 small caps, down $1.78, 233.40. Here it is. With the 9-period moving average acting very well, above the 14. The MACD is still good. Stochastic great at 92%. The on-balance volume has pulled back, but until it breaks under 228, and right now the low for the day is 231.40. Well, until it breaks that level, it's really in a sideways trading band, and that's what we're going to be monitoring. SMH is very important because SMHs have been weak, down 5 1/4 at 285.08. Have not taken out the left side low, but got very close at 281.74. The low we're looking at was 281.15. So close. Hasn't taken it out yet, but this is that H pattern. Same thing. Watching it very closely. Let's go to the gold. So I'll do this because Tommy is not available today, so we'll be having some order a little later on. So I'll do my newsletter, the usual interview that I have with Tommy. I'll just do it as we're moving along. We've been long gold for a very long time. We are still long. We were looking to see whether or not this upside spike in the rectangle, this is the same rectangle pattern that we were looking at before, except now it's gone from a large to a long, narrow one. And that just says that it should rally to a D above the previous high or just below or right on. And then you've got to do an analysis, because if it takes out the midpoint, and in this case it would be 34.31, you can expect it to go all the way to the low, to the 3,300 level. Except this is a continuous contract. Look, the high was 35.94.6 the week of the 25th, and today's high is 35.98.5. So we have closed. We haven't closed, but we've gone above it. In leg T, this is the rule of thumb that I was telling you about just a moment ago. It's gone to a leg E in the monthly chart. The GDX, look at this, GDX. The GDX has spiraled to 64.75, and this is G/C. This is a very strong pattern, and it broke above the inside track repellent zone I was talking about for so long, discussing the weekly charts, how those 2 bars in April and then 2 bars late in May, and then again right here in in August. After those 2 bars, there was a sharp fall. And then I said, if this breaks out above this inside track, tiny little up channel, be careful on the upside. And look what we've done. We've broken out. 66.98 was the target I had for the GDX. That was September of 2011. Today's high is 65.09. It's still got a little bit of a way to go. But isn't that amazing? And I had left side, right side. Who would have known that this could even work? Left side, right side price time match from 2011 right to this midpoint right there, September of 2018, saying that this month, September, we should see 68.98. I can't believe that it's almost there. That's amazing. All right. Next thing we're looking at is so we're long. We're long. We got CDE Core Mining, which has been really a great buy. We got it at $7.92. It hit 13.79 today, so that's like almost a 75% gain. Very nice. The gold that we have is the physical gold, spot physical gold units. We once had the GDX, but I chose this because I thought that it had a very strong pattern. And look at this. We're in. Look, right here at the very bottom in 2024, we got in and we're still long. And here it is at 27.14, a very nice move to the upside. So with that said, I wanted to go through just a couple of things to say, look, the volatility index, VIX, there it is. The volatility index had a huge spike to the upside. It's done that before, tootling along in the 14s, and then within 2 sessions, today it hits 19.38. It has pulled back from that level. So we're going to be monitoring. I don't like when markets come off their highs and very quickly the VIX index runs up into the 20 area. It just missed the 20 area. So I'm going to be watching this. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien. My newsletter is called The Opening Call, and my service is the Tiger Technicians Hour, 10 to 11 every market day. I'll see you in a few minutes.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi everyone, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and this is usually where Tommy interviews me. I'm just going to run through a couple of things. You see this rectangle here? You see the way it's made? This is the 1 minute E-mini chart. See the way it's made a cup formation, and that becomes an overlapping wave C, and that should go to a D. Well, as we're speaking, it just went to the D. So these are techniques that we use. I show my subscribers every single week, every single Friday afternoon. I have an hour and a quarter, sometimes an hour and a half. It's like a webinar. I call it a video, and we go through what's working, what's not working. So, and every day I give a daily an analysis on the Dow, telling you exactly what to look for intraday. So with that said, let me just show you a couple of things here. So we've been along the AIQ, which is the AI ETF for the Global X Artificial Intelligence EDF. Went to almost an all-time high about 3 sessions ago. Now it's pulling back. I think it's digesting gains. We still have a core long position from way lower, but then we've got a trading position, which has also been very good. We've got Bank of America. What I've been looking for was the target, this cup formation target of 50.11, the all-time high back in 2022, February, and it went down to 24.96. And what did it hit the other day? It went just under 51, so it's got this potential testing of the double top, and we'll see what happens. That was our target, so it's accomplished everything we wanted. CDE, as I said, core mining, we've had for quite some time from 792, and here it is at this is about a 75% gain, 13.63. Let me go through my other ones as well so that I don't forget them. I always forget something. So this is what we're looking at right here. Okay, so we've also got, no, that's not what I want. That's what I want. Okay, so within the context of our different positions, we've been raising cash. Today we added a short position on the S&P, fairly tight stop, but a short position nevertheless. We are still long our GE from 198. And it hit 277 round number high, popped a little high to 281 the other day. Now it's arching over, but actually it's come back very nicely today. It's only down, it's unchanged at 275.20. We're wanting to add to these, so that's General Electric, Robinhood, We got our initial position in the 16s. We've still got that left. We've taken other ones off. We've got very little left, unfortunately. We'd like to add to it. It's down 101.53. It hit 117 double top the other day on the 12th of August. And now it's just digesting gains. Still, we'd love to add to these positions when we can. And Microsoft is another one. 338 was our initial position. We still have that, but we've got very little left of these positions. 503.79 down 3 today. 555.40, so it's gone all the way to the 555 level in July, pulled back very sharply, and I think it's going to digest some gains. I think it's a tremendous amount of the pullback might have happened. We'll see, because it needs to hold 495. If it goes below that, then it'll continue lower for a little while. So the other thing is we've got iShares. Here's the Bitcoin right now. Bitcoin is up 24.65 at 111,024. We've got the IBIT, IBIT. IBIT was down. It's at 62.85. We're still long from 39.15. It hit the 60s, just under 70, and now it's digesting gains. Let's see what else I can tell you. Yeah, so this is very interesting. We got a position the other day because I said I'm a little afraid that we're going to have a pullback in the market, and certainly our big positions, the high-end level positions are going to pull back, so we want to get into them. But in the meantime, we need to find something that has the potential to really bounce on any news, any good news. So we got this position. I liked it very much. I've liked it for a long time. And then IREN, Iran, or Iron, I still haven't heard anybody pronounce it. It's a former Iris Energy Limited, next generation data centers, renewable energy, GPUs. We got it in the 22s. And that was that was on the 26th of August. And then it had earnings coming out on the 27th. Well, the earnings were really good, and it spiked higher. And today it's even higher. Today it hit 29.85, from 22 to 29.85. I'd say that's a very nice gain. And we needed that because we knew that there was a really good chance of the market pulling back, and we need to alleviate or ameliorate some of that decline by having something that works. And thank goodness our analysis and everything for this did work. All-time high right now as we speak. So we still have some other positions, but most importantly, what we're looking at right now is a digestive phase, and in this and one of the things that I want to often talk about, and I thought I had done this for subscribers the other day, but when I looked afterwards, I see that I didn't. I talk about the Chapman Wave Dark News Cloud Cover. And every time we get an internal high and then a residual high, that's like an earthquake and an aftershock, either at the bottom or the top. Well, I said about a week or so ago, I think we've made an internal high, and on Thursday, that would be a residual high, and then we should pull back. Well, we have pulled back, but the 9-period moving average is still way over the 14, so it's just the start of it's the beginning analysis and the preparation for some kind of a pullback. Does it unfold? Does it work out? Well, we just won't know. It's time alone will tell. But in the meantime, so far we have got a fairly sharp pullback in the overall market, and that's the reason why we do have a short position in the S&P. And as I say, I've kept the stop fairly tight. But I would say this is a little bit more aggressive than usual. And as it stands right now in the S&P, here we go, the S&P. So check out my opening call, because that's where all these techniques are discussed in great detail. And I try to have positions for subscribers in all price ranges, whether it is a single digit. We have had some look at our core mining in the 7s, and here it is in the 30s. If it's single digit or low double digit or a high price, it doesn't matter. When I'm looking at the charts, I like to have something in positions for subscribers of every variety that would like to take something small, likes the technique, likes the positioning, likes the potential, or even if something very much higher. So let me just show you this very quickly. What needs to be done if this is going to become a deeper pullback. If it's a deeper pullback in the S&P, you need to see a close below 6343.86, the low of the 20th. And if that's the case, then it's not good enough, because you still have to see the 9-period moving average, which is green, above the black 14-period moving average, go pink. When it goes pink, That's very negative, and then you can have an accelerated down move. At this point, it's a work in progress. We've just started this whole thing. We were at all-time highs just moments ago, just a week or so ago. So you've got to consider this is a rotational correction at this particular point. And here's the SMHs. It's very important because that's going to be a clue. SMHs semiconductors at 285.55. If at any point this week, any day this week, there's a close below, I'd say 280, but I have to really go to this left side low of, was that late July? No, August the 1st. August the 1st, the low was 279.19. Anytime this week, if there's a close below 277, that's a problem. But in the meantime, it's just, I'm treating it more as a digestive move with very specific areas that are starting to show some wear and tear. So I think I've covered a lot in my newsletter. And let's see, the next thing I wanted to do is just to discuss this overall is that the TLT, the bonds, look at that. Yields are going higher, and that's been my concern. Everyone keeps saying yields are going out lower, yields are going lower, and I'm looking at this and I'm saying this monthly chart with a lowercase h that goes to a lowercase m. Wow, that usually lasts a while, and it has. I'll be back in a moment with Tim Ord. This is Basil Chapman sitting in for Tommy O'Brien. Be right back. Dow is down 341.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. This is Basil Chapman sitting in for Tommy O'Brien. It is my pleasure to have Tim Ord from the Ord Oracle on the line right now. Tim, how are you?
Good. Thanks for having me on. You have a good
Pleasure.
holiday?
Very good holiday, yeah. A little driving around to New York State and back from Boston, and it was fun. It was very nice. How are you?
Good. Well, let's take a look at the market, see what's going on. Market's
Sure.
down about 1%, whatever. This chart is the daily SPX tilt ratio. The bottom window is the SPX, and I talk about them every once in a while. But over the last week or so, if you notice up here, you can actually see it over here better. The SPX tilt, the divergence comes when the SPX tilt ratio makes a lower high as the SPX makes a higher high. So to don't have an invergence, both of them should make higher highs as the market goes up. Well, the market has been going up for looks like about mid August. It went up and hit a high last Thursday. We actually just got out of our position on Friday. We seen the divergence, but anyhow, you can see here that tilt ratio made a lower high as the SPX, the SPX tilt ratio made a lower high, where the SPX made a higher high, and that's the negative divergence. And sometimes they can last along, so it doesn't really ring the bell at the top, but does give you warning that probably the rally is running out of steam.
Can I just, to clarify, so this is the ratio between the S&P and the TLT, which is the Lehman 20-year Treasury bond fund, right?
Right.
Yes.
It's basically the equity market compared to the bond market.
Right.
And TLT is just a tool that I use. So it kind of, so you want basically in an up market, you want the equity market to lead the bond market. And when that stops happening, you got a divergence. And sometimes those divergences can last a while. The only thing it really gives you that you're probably going into a high. This next chart, you can see a little bit better. This is a tilt. You can kind of see where we hit a high back in mid-August, and as the S&P's made a higher high going into last week, you can see it was a little bit of lower high. So that's a negative divergence. What I want to point out, though, there was one on the VIX also. We had a small divergence in the VIX last week, where the S&P's made higher highs. You can see it right there, and the VIX made a lower high. Right. So I thought we might rally into the first week of September. That wasn't the case, so I was kind of waited on the sidelines a little bit too long. But what the pattern's probably forming here is let's see, this pattern. This is what I'm thinking is going on. The whole pattern that's been forming since what happened there? Okay. Let me get a different tool here. This one's kind of hard to see, but the pattern forming is probably a rising wedge pattern. And the pattern forming started back in last 1st of August and lasted till end of August. And I think we're probably going to go back down to around 620 area, probably a little bit lower on the SPYs. And the reason why I call this is probably rising wedge, as the market moved higher, the volume kept going down. And this is, we had a kind of a steep decline right here where the volume really jumped up. And that usually leads into highs. I always found that once you get a big volume down, even though the market may move higher, you're probably topping out, and that's what happened here. So I don't think the rally or the decline is a one-day affair. I think we're actually going to go all the way down to 620 in that vicinity. And if you look at the let's see, is this chart? Yeah, the 620. If you draw a line across there, is basically the February highs. This is the SPY. So I think we're going to go back down to the February highs. So we kind of chopped up. The summer doldrums are always kind of problematic because the volume drops out when the market goes up, and that's usually a bad sign. So I'm thinking we're heading to 620. And from there, we'll have to wait and see. I think it is going to be a decent bottom back in this range. And so far, if you notice the trend today, it's actually below 1. Last time we checked, it's like 0.72. So even though the market's off, a good percent or thereabouts, there's no panic in the trend yet. And you don't get a bottom until you start seeing panic in the trend. So today's not a bottom. Even though you could maybe bounce for a day, it's not a worthwhile bottom to trade as far as the trend goes. So I think it may attempt to bounce. But in general, I think we're going to go down to 16 or 610 on the SPY. I think that's where the panic's going to show up. And if it does, that's probably where the buy signal is going to be. And if the panic doesn't show up at 6,100, then it'll probably go down until you start getting panic, so wherever that is. But most likely, I think it's going to be 6,100. So it's not a top of long-term nature. You got September and October to get through before I think the market gets back on its feet and you rally to year end. So I think this month and next month can be choppy. I think it'll try to rally, come back down. So you got to pick your space. But I do think before the year is out, I think we'll see higher highs, higher than above the September highs. But I think you'll see 6,100, 6,200 first before those highs are seen. So we can take a look at the gold market.
Sure, yeah. What a market that is. You want to go to GDX right now?
Yeah, we got a minute or so here.
Okay.
Or unless you get some, comments or
no, the only comment I don't want to waste time. People are waiting to hear what you said. I just wanted to say that the VIX index, the trend index, I find different platforms sometimes give different figures. I often have a different figure on TradeStation than in say, a Fidelity or others, but I just want to mention that in passing. But I'd love to hear your take on the GDX.
All right. Well, as far as the trend goes, I use on sink or swim. Yeah, sink or swim. And whatever you use, just stay with that trend.
Consistency, yes.
Yeah, because if you switch around, you'll
you get messed up.
You're right. I have talked about that too, but we're going to go in a break here. So this is actually good because we'll spend another next segment on the gold market.
Great. We're all looking forward to it, Tim. We'll be back with Tim Ord in a moment from the Ord Oracle. This is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and my service here at TFNN has been for 21 years, 22 years. This is my Target Conditions Hour at 11 o'clock, and my newsletter, The Opening Call. I'll be back in a moment. The Dow's down 300. Coming back a little bit.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Hi folks, Basil Chapman sitting in for Tommy O'Brien. We've got Tim Ord on the line. Everyone's waiting. We've got the GDX. Tell us all about it, Tim.
All right. This is the monthly, top window is a monthly XAU. Next window down is a monthly XAU gold ratio. This goes back to, 1984. So it goes back far as I could go back. And I did was mark the times when it basically stayed in a trading range. This was 2 years. This was 4 years. This went sideways basically for 6 years, 2-year period there. But the ratio hasn't moved basically since 2014, so approximately 10, 11 years it's been going sideways. And so, I think it's probably about ready to do something other than trade between 0.05 to 0.08, looks like, thereabouts. And I think we're going to break out to the upside. And the reason why I say that is because we did actually get a sell signal here a couple of months ago or a couple of weeks ago. I don't know, fairly recent. We did get short. We covered the short, had a loss. And we'll get to that reason why I covered. But I'm thinking this ratio is actually going to start to break out of this trading range. And so top of the trading range looks like about 0.08, give or take. And I think we're going to break back there and actually go up to this up here, this 0.175, because gold stocks really have been dead for the last 10 years. And this is one of the reasons why it just hadn't kept up pace. But anyhow, that's my view. I'll
Can I just ask you, what's the little red dashed line right at the top?
Oh, that's the top of 2011 XAU.
Okay, that's just to mark the top, that's all.
Yeah, I just marked top. It shows, we're ahead of it. We're top of it now.
Very good.
If we're above there, there's a chance we could find support at that previous high. And if that's the case, then this would be more relevant because I think we'll start breaking out. But this is a shorter term view. This was my prediction. Earlier in the year, I had this chart and never updated it. But I had a chart going back up to this 0.085. I think we're at least going to get back up this area. This line right here is the top line of that right here. So that's the top of that trading range. So this area here is just blowing up, and this is what it looks like on a, this is a weekly. So I think we're going to go to 0.085. That means gold stocks are going to keep rallying here. So I don't think we're going to really back off from this, even though the RSI is up here about 70. I see a lot of gold stocks just starting to break out. Not the seniors. The seniors already broke out. I see a lot of the juniors are breaking out.
Like the silver stocks as well. Yeah.
Yeah. And they're breaking out with volume. So, if you start breaking above previous highs on higher volume, that implies the previous highs will act as support. So even though there'll be consolidation, there'll be more or less a mild consolidation. And I pointed this out last time. This is the bottom window is the 18-day average of the advanced decline. It's on a daily basis up for GDX, just the stocks in GDX.
Okay.
And next window up is up-down volume for stocks in GDX. So this measures the up-down volume and advanced decline. So when their stock's extremely strong, this ratio gets above 40. And when it does, I mark the times in red. When it does, we just had above 40 last week. One got to 44, and the other one, I think it was 39.48, close enough. A lot of times, this is the only failure right here, but the other 4 times, either the market went up for another 6 months, this one went up another 3 months, this one went up another, I don't know, looks like 4 months. This one, no, that was 6 months, and this one was like 4 months. And this one kind of just failed. It didn't really go down much, kind of build a base before it took off. And we're happening again right now. What that means is the previous 5 times we got to 0.4 in both those indicators were 5 times but 1 failure. And the failure wasn't really a big failure, it just kind of went sideways. So there's an 80% chance that the market's going into a surge pattern that may last 3 to 6 months. And I think that's what we're going into. I don't see a top of a gold of any consequence. Matter of fact, we just broke out of a consolidation phase. So I think there's more room to the upside in gold stocks. So am I long GDX? No, I got to find a spot to get in. And right now I don't have one. So I'm neutral. Actually, I'm bullish on GDX. I'm just not long. But I think there could be a mild consolidation at some point. I'll probably get long. If there's no really consolidation, I'll have to just stick it out. But I do own a lot of gold stocks, and all of them are doing extremely well. So I don't think there's any top of any consequence here. I think, how high it's high, I don't know. But I think the GDX GLD ratio is going to break out to the upside above 0.085 at some point. Is it this time around? I think there's a good chance that could happen, because that ratio, getting back to this pattern right here, is very seldom you go that long without, in a trading range, without either breaking out to the upside or breaking out to the downside. Can it break out to the downside?
This is one of the longest times, right?
This is the longest time. Yeah, well, I haven't updated the chart. It's actually 11 years now. But either it breaks down, which gold stocks will be extremely cheap compared to gold, or it breaks up. I think we go back to 0.75. So I think the gold stocks, matter of fact, I do have another ratio. I didn't bring it with me today, but it's the ratio of GDX compared to QQQ. And that ratio has been going down for quite a number of years. And I think it's about ready to turn back up also, and that will imply that the GDX will outperform the QQQ. So I think there's a big change coming, and so I think we're in the midst of it right now. And if things change, I'll change with it. I'll eat crow and say, nope, this is not right. We're not going to keep going. But I do think there's quite a bit of evidence with this big base in the GDX or the XAU gold ratio going sideways for so long. It needs to either go up or break out to the upside or break down to the downside. And I just think it's just too cheap, but I think we'll find resistance there. But to get to 0.175 compared to where we are right now, without gold moving at all, that would mean over a double in gold stocks just to get to that ratio.
Oh, okay.
So it's where are we right now? We're 0.072. So if you double 0.072, you come up with around 14 and change. So to double this ratio without gold moving, that means gold stocks GDX would double without gold moving it at all.
Wow, that's quite something, yes.
Yeah, so gold GDX would go to 120 or something like that, thereabouts, because it's approximately around 60 right now. So anyhow, we'll see what happens. You know, things change. Always look at the bigger picture first to see what's coming up. And I think
Tim, before we go, could you just quickly say how the people can reach you?
Ord-oracle.com is my website.
That's great. So thank you so much for being here, and we will see you again on Thursday, well into the week.
All right. Thank you.
Thank you, Tim. That was Tim Ward, folks. This is Basil Chapman sitting for Tommy O'Brien. Dow's come back a little bit, down 280, and the S&P is now only down 48. Not bad action for a day like this.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. We're back. Basil Chapman for Tommy O'Brien. The S&P futures down 49 at 64.23. Let me just show you in the Chapman Wave methodology. We're always looking for a buy signal to be upgraded to a buy mode, and that gives you at least 4 higher peaks. Here it is. Look, from the lowest low bar, you count each successively higher peak. Alphabetize them sequentially on the way up. Uppercase on the way up, A, B, C, D. You can go to E, F, and G, but the objective is to go from a buy signal upgraded to a buy mode, which means you should get to at least a D. Look what happened here. We got one peak D from the low that was made around about 3 o'clock. Peak D in the 1-minute chart. Peak D in the a second peak D, and now it's gone to an E slightly higher. And look what happened here in the 5-minute chart. It's gone to a peak D. The technicals have improved a lot, and the 10-minute chart, peak D. So that makes, over the period of the next, going into this evening, 64.24 is the 200-period exponential moving average in the 10-minute chart. That might be, that could be support, resistance, and support is at 64.06 here in the 1-minute chart. That's how we like to use these different